what I think that I've discerned most from it, because I love this way of thinking, right? Buy and hold and sit on it forever, never sell anything. I think there's a big divide right now, especially maybe not especially, but definitely in our community, where everybody's talking about real estate, but there are a lot of entrepreneurs who want to start businesses. That's wholesaling, flipping, cold calling businesses. They want to start businesses. And then there's people that want to buy assets and sit on them and wait forever. And it's all real estate, but there's definitely a divide. And I think it's really important, listening to Martin's story, I would implore our listeners to say, which one are you really? Now, you can obviously do both, but I do think there's a big mental shift between somebody who says, I'm going to buy no matter what through the ups and downs, and I'm just going to hold on to it forever, because 2007 was the biggest real estate crash, that we'll probably see in our lifetime. We'll see bigger crashes, but not in real estate, not like that. I'm speculating. But even if you bought at the height of '07 and you hung out, you're in the good by a lot. And so, this idea that real estate only goes up, it's like, no, real estate doesn't only go up in the short run. Have cash reserves to sustain through the down periods. But yeah, I will sell things, but man, I love that story because it encourages me to say, whatever I own now, I'm holding on forever. I never want to sell it. I just want to keep it forever and just let it go up.
Yeah, that was my encouragement, right? Because look, I'm a human being. We own a sizable portfolio, 100+ stores, multifamily, and we're trying to protect. The 2023, the game for us is we got to play defense. We got to protect our wealth. We got to protect our assets. So cash reserves, making sure we're disciplined, but we also got to be playing offense. And we got to be playing offense because there's going to be a lot of opportunities. And if we are not conscious of every move we're making, especially right now, and you're not a Bill Gates or a Warren Buffett that's just got gazillions, right? I don't. I got to make sure that I'm making smart decisions. And I'm not going to sit here and say, hey, yeah, just because we've done well doesn't mean that doesn't mean that I'm going to continue to do well. I have to continue to study. I got to continue to be smart. I got to be calculated about my moves. And every buy I buy, I have a few things on the contract now, very conservative. We're buying an 18-unit motel that we're turning into multifamily here in the Poconos. And the numbers is just, I've thrown that thing upside down, back and forth, and the numbers just make sense. It's a really strong buy, regardless of what happens in the market. But we're being very careful.
I'd like to talk more about this, actually, because as somebody, a little bit of my backstory, not to make it about me, but I basically took 2022 off because I said there's no way that I can make money. Some of the deals that I was penciling out make 1% IRR. And I'm like, I'll just go travel the world. I can make more money hanging out than I can by buying a risky asset at 1%. But the world is changing quickly. And I think a lot of the mania certainly is clearing off. And a lot of the people that would be willing to pay 5 or 10% over now are mostly, I think, gone. And now people are starting to, come to the negotiating table. And so I'm curious what that looks like for you. I mean, I think, specifically in commercial multifamily, we're going to see some cap rates decompress.
We're seeing them already.
We're seeing we're seeing that already. We're seeing retrades. We're seeing deals back out, and we're seeing sellers come to the table. So I'd be curious a little more details about, an offer that you say, hey, I'm buying in this period of the market where I think it's certainly the most volatile in the last 10 years, especially for an investor like me who didn't start till 2014. It's the most unknown, the most uncertain. And, how do you balance, like you said, I do want to play offense. The time right now for opportunity is monstrous because the people who are easily scared are running out quick and they're going to give you the most opportunity. So the time to play offense is now. You don't want to be surprised that there's opportunity in the market. You want to be hunting for it. At the same time, I don't want to buy something, especially if I'm raising money or using other investors' money. It's not even mine, right? And mine too, but especially if I'm using somebody else's money, I don't want to buy something that puts them at undue risk. So could you speak a little bit more about maybe specifics about how you balance those two out?
So that's a loaded question. I'm always conservative. So one piece of advice one thing I've always done, okay, after I learned, right, because when I bought that first property in 2007, I didn't know what the hell I was doing. I was cash flowing. Had I known what I know today, I would have never looked at that property the way I did. My perspective shifted. But one thing that is extremely important, we saw last year, I have a 57 unit where we've been working on refinancing, I'm going to say since July. and we're about to get to closing here in January, end of this month, February. And the lending world has shifted so much. LTVs have dropped. I mean, it's just kind of collapsed almost, the lending world, in terms of how conservative they got and how afraid they are. So one thing that we typically do is we're very conservative. So if the lenders are, their DSCR is 1.2, and that's the debt service coverage ratio for those that don't know what that is. If the DSCR is 1.2, we're penciling out at 1.4. If we're buying a property, because we're trying to pencil it out at 1.4.
Yeah, that's big.
Now, so because I know your listeners, or maybe you're thinking, well, how the hell do you find those deals, Martin? Right? So you mentioned something earlier where you talked about business and holding. I do both, right? So I have my own marketing team. Those were my sales guys that I just kicked out of my office here. They were out here talking. I said, guys, go to this conference room, right? And I have a marketing team. We spend a lot of money in marketing. We have a TV commercial. We do a lot of unique stuff to get deals. And so one of the things that I do regularly is I'm in touch. My banker, I just had lunch with my lender. Literally, I have another lunch meeting with my lender next Tuesday, because I want to know what is it that the banks know that I yet don't know, that hasn't hit Main Street. I want to know, what are you guys thinking? What are you guys seeing? What's coming down the pipeline? So I can plan accordingly. So I'll share, for instance, this particular deal that we have. This deal, we got it from a wholesaler. He put it in my Facebook group. Epic, my Facebook group is Elite Pennsylvania Investors Club, private group. So if you guys want to join, he put it in my group. One of my sales guys found it. We went after it. It's 18 units, and he had it for $1 million. I saw it. I know the location. I was like, yeah, that's a deal. I was like, that's a deal. We scheduled it. We went to see it. It's an older guy, 80 years old, wants to get out. He's tired. They even negotiated seller finance, but he wanted to be first position on 700,000. He was like, give me 300. I was like, none of my lenders are going to play second position on 700,000.
Right.
No one's going to do that. Right. So we're just buying them out completely. But when we penciled this deal, the upside is so insane that regardless of what happens in the market, Alex, we're going to win. Example, he's got a one bedroom for he's got 7 one bedrooms for $730. That's a $1,100 rental without me doing anything. That's what it should be market. Me going in there within 3 months, we're going to pump up the income by about 60%. Right? We're going to take it from 10,000 to 16,000. Now, you know how this works. You know how this game works. What's the cap rate? What's the value added? What are the camp charges? What am I rubbing on onto the residents? And my bottom line goes up for every couple thousand I add to my bottom line, you divide that by 0.07. That's how much value I'm adding. I'm basically doubling the asset value. So what do I care if the market takes a 10% dip on that property? That's a for sure bet. Right? That's a for sure bet.